Okay, so that's how we do it. When you sell your PP, when you retire your PP, so don't forget step 1, do the depreciation. Step 2, record. That's your gain or loss. Okay? And after you've done this, don't forget, always we need to prepare our financial statements, right? So for our financial statements, you have depreciation expense, right? For this year, $8,000 from your step 1, right? So from your step 1, you know this year I have 6 months more. So I have depreciation expenses $8,000 more from your step 1. Also, don't forget, when you sell it, you have your gain, right? So your gain $5,000 from your step 2. Gain is like your revenue. So that's why you will find out your gain or loss on your statement of comprehensive income. So here I have a gain on disposal of plant assets, $5,000. That's from your step 2. Okay. So step 1 told me I have depreciation expenses for 8,000 more. Step 2 told me this transaction is my gain, $5,000. Alright? And also here, one thing I want to tell you. Before we've mentioned operating expenses, we use that for what? Operating activity, right? So any kind of expenses for operating expenses, any kind of expenses for operating activities, we put into this section, operating expense. So operating expense for operating activities. For operating activities.营业活动 So depreciation is your operating activity. Why is that? We use our PP to produce our product. So in order to sell the products to customers. So we use our PP to produce the products in order to sell the products to customers. So that's our operating activities in order to earn the revenues from customers. Okay? But when you sell your PPE, you have a gain or loss. Sell my PPE, that's not our operating activities. Our operating activity is sell our products. So like your laptop, will you sell your laptop every day? No. So laptop, PPE, when you sell it, is not operating activity. It's our investing activity. So any kind of activities for financing, investing, we put into this section. Other income and expense. 其他收入与费用。Other income and activities. This part we put only for investing and financing activity. 投资与融资活动。投资与融资活动 ，OK？ You sell your PP, that's not operating activity. You sell your PP, that's investing activity, 投资活动。 investing activity like I buy my PPE. You buy the house for what? For investment. In order in the future, I can get the profit from the house. Financing is you borrow money from the bank. That's financing. Okay, any questions? If you don't have any questions, please go to your note on page 31 and 32. Please finish page 31 and 32. The whole process we have. So far, the whole process from page 31 and 32. At the beginning, you buy the PP. Then, for the following years, you use your PP. And in the end, finally, you don't need it. You sell your PP. So that's the whole process we have for your PP on page 31 and 32. So please finish it. Okay, if you finish, you can double check the answer right here. Okay, anyone still need a time? So let's look at the answer on page 31. First day, you buy your PPE, right? So your PPE equipment increase. Did you pay the money? No, with a note. So you have a note payable, your liabilities, $750,000. So remember, first day, you got a number. What's that? That's your cost, right? How to get the cost? Usually 1 plus 2. So that's our first issue, this chapter, right? After that, since we use it, so each year we need to do the depreciation. Since we use straight line method, so straight line method told me each month, each year I get the same number, right? So here told me straight line method, I'm using straight line method. Also 10 years, no residual value. Because of that, I find out each year the number should be $75,000 for each year. Cost minus residual value divided by useful life. So each year I had to record depreciation expense $75,000. Okay, so each year for your year 2017, 2018, 2019, each year you have to use the same journal entry, right? Don't forget, journal entry only for 1 year. So each year you have to record it. Journal entry only for 1 year. Don't forget it. Okay? So only for year 2019, I record the same journal entry as before. Then don't forget, since we are going to sell it, so when you are going to sell it? May 1st. So be careful. Last time you do the depreciation at the end of 2019. Right now, we have 4 months more, right? So you used PPE 4 months more. So what does it mean? Don't forget, always, first step, do the depreciation to find out your book value on that day, right? So 4 months more, how much? $75,000 times 4 months, right? So that's how we got our depreciation expense for the 4 months. So don't forget, step 1 is what? Do your depreciation always. So this is our step 1. After step 1, do the depreciation for 4 months. Do you know your book value? Okay? So this how we got our book value. So what's your book value on that day? Book value is cost minus accumulated depreciation. What's your cost? $750,000. What's your accumulated depreciation? before each year, $75,000, right? So $75,000 each year. For how many years? 3 years, right? And don't forget, we have 4 months more, right? So 4 months is what? $25,000. Okay? Yes. 4 years. Sorry. Okay? So after 4 years and 4 months more, I know my book value. After that, you will know that's your gain or loss, right? So you need to do the step 2. What's your step 2? This is your step 2. This transaction, I got the cash. So you got the cash. You sold your PP, so your PP should be decreased. Okay? So that's right. My PP decrease. So your PP decrease. This is your book value. And you got the cash. So your cash increase. So this is your first effect. Second effect. Compare your first and second effect. You got this is your gain or loss. Okay, any questions? After that, so far, any questions? No problem? Then after that, since you prepare the journal entry for step 1, 2 already, you just copy the number to your financial statements. That's all. So depreciation expense this year, $25,000. You have a gain, $41,000. So just copy the number to your financial statements. That's right. I have a depreciation expense. This number from your step 1. I have a gain on sale equipment. That's your step 2. And don't forget, we put it on different sections. Operating expenses or income, other income expense. Okay? Any questions? So just look at your journal entries. Copy the number to your financial statements. Okay? Then, how about your balance sheet? That's before the number you have. Right now, you sell your PP, so that means your PP decrease. How much? PP decrease equipment $750,000. Accumulated depreciation $325,000. So that's your PP decrease, this amount. So before you got a number, then your PP decrease this number. So this is your PP decrease. Because you sell it to others. So before this number, your equipment decreased $750,000. Accumulated depreciation decreased $325,000. After that, that's your result. After you sold PPE to others, so there's a remaining PPE you have on your accounting books. So this is still your PPE still on your books after sold some PPE. Okay, any questions? Right? I had the PP before. I sold some PP, so that's the remaining I still have. Any questions? No problem? Okay. So we talk about you throw it away, you got nothing. You sell it, you got some cash back, right? We still have a third one. What's that? Exchange your PP. So I exchange my laptop to get one bicycle back. Okay? So for this case, so what did you get? One bicycle. So remember, there's the only one different. So the only one different is you got bicycle back. If you don't have any questions, so we talk about that. Here, before we talk about that, I want to remind you again. If first you retire it, since you retire, you got nothing, right? So you got nothing means what? Your PP decrease. So your PP decrease. You got nothing. So since you got nothing, you don't need to recall anything. But for this case, your PP decrease, you got nothing. Usually, that's your gain or loss. Loss, right? Because you got nothing, so usually there will be your loss. Okay? Second, when we sell it, you sell it. So you got what? You got cash back, right? So remember, your cash increase. You will have PP decrease. This transaction is your gain or loss. Maybe gain, maybe loss. Not sure. Right now, we talk about the third case, exchange. So exchange, what's the difference? The only difference, remember, is what did you get? You get not only cash, you get another asset, okay? So if you understand before, you should understand right now. The only difference is you got another asset. Others totally the same. So your PP decrease. And this may be your gain or maybe your loss. So did you find out? For these three methods, these three transactions, the only difference is what did you get? You got nothing, you got cash, you got another asset. Let's say others totally the same. You got nothing, you got cash, you got another assets. Others totally the same. Okay? So we talk about the last one, exchange. So remember, you got another asset. That's it. Others totally the same. So let's look at the case on your slide. One hundred and 136. 136. This is 135. Next page. 136. Okay? So right now we talk about exchange. Exchange. So what did you get? Another AC. So you got another AC. Okay? So you use your old truck. So this is your old truck. Your old truck book value after step 1. Book value is cost minus accumulated depreciation. So you got the book value should be how much? $42,000. Cost minus accumulated depreciation after step 1. Okay? But you know, when I use my old truck, try to exchange something back. Another guy told me it's not enough because you want to get higher value back. So they told you, for your old truck, it's not enough. You should give me the second thing. So plus, you should give them the second thing. What's that? The cash. So you should give them the two things. Also for the cash, plus means plus. Okay, plus cash. For what? For the new truck back. Okay? And for the old truck, on that day have a market value $26,000. So your old truck also have a market value. On that date is $26,000. So what does it mean? It means today you use the old truck plus the cash, two things, in order to exchange the new car back. So you have to use two things, old truck and the cash, these two things, in order to exchange the new car. And here told you for the old truck, book value $42,000. How to get $42,000? Because of cost minus accumulated depreciation, you got book value $42,000. So this is the value on your accounting book. But at the same time, this old car, this old truck, they have the value on the market is $26,000. Okay? So this is value on accounting books.账面价值 This is market value. The value on the market. (市场价值) Okay? So based on this, you use two things in order to get new car. Alright? But here, did you find out? Do we tell you the new car's value? We didn't. So could you note what is the new car's value? I got a new car back, right? So I have to know the new car, what's the value for the new car. So do you know, based on the data you have, what's the new car's value? If I exchange something to you, like what? Like a Sabrina, I use my cell phone, want to exchange your new cell phone, is okay for you? No, why? Because you think my cell phone's value is too low, right? So what kind of situation you will accept my cell phone? Only when both of cell phone have the same value, right? I give you $100, you will give me $100 back, right? If I give you $50, will you give me $60? Impossible. So what does it mean? When we want to do the business, only when both sides think the values are the same, right? You will do this kind of transaction. So based on this, if you want to exchange the new car, then for the person have a new car, they will accept all truck and cash only when they think the values are the same, right? So the values are the same from the market. So what's your new car's value? Only when both of them, the values are the same, right? From the market side. So from the market side, they think what is old car plus cash value? How much? Should be $26,000 from the old car. Plus, they think old car's value from the market side, $26,000 is not enough. That's why they ask you to pay more cash. So the more cash, how much? $17,000 the cash. So for the market, they think only these two total value. They think that's the same value as their new car. So that's how we find out the new car's value. Should be how much? $43,000 for new car. Okay. When I do any transactions, when I want to exchange something, only when we have the same value, then I will do that. Otherwise, impossible, right? So that's how we find out new car's value. So you got a new car. So for the new car, how much? What's the new car's value? Should be this one. Okay? So after that, I know I got a new car. How much? So you got a new car. How much? Should be $43,000. The market value. $43,000. So $26,000. This from your old car. $17,000 from your cash paid. Cash you paid. So from the market, they think only these two things, they will have the same value as the new car. Okay, so that's what did you get. And you give up what? You give up two things, right? So you give up these two things. First is what? Your old car. So your old car, what's your value you have? So that's for your old car. And this is for the cash you paid. Okay, so you give up the book value, right? The value you have on your accounting book. So that's the PP, the cash, the value you give up. You got the new car from the market. So you will get the selling price, you will get the market value. Okay? So you give up the book value. You got the market value. This transaction is your gain or loss. Compare these two. What do you think? You pay more, you got less. So this should be your loss, right? So compare these two numbers. You note this is your loss. How much? $16,000. Okay, any questions? No problem? So first way, how to find out the transaction is your gain or loss. You compare what did you get. You compare what did you pay, right? So use the total amounts to know this is your loss. Okay? So this is the first way you find out this is your loss. So this is your first way, method 1, to find out this is your loss. Second way is quite simple to find out this is your loss, is to compare what? Your old truck's book value and fair value. So you compare these two numbers. Book value and market value for your old truck. Also, you will find out this what? This is your loss. $16,000. So this is your second method. Also, you can find out this is your gain or loss. Okay? I think my old truck's value $42,000, but when I going to sell it to the market said its value, selling price, only $26,000. So that's your loss, right? Okay, any questions? If you don't have any questions, please finish the problem on page 33 and finish page 34. Page 33 and 34 about exchange. The only difference is you should find out you got a new truck. What's the market value for your new truck? Others totally the same. If you finish, you can take a break.